Welcome to your real estate journey, expert tips for buyers and sellers. I am Dolly Lopez, your realtor and broker in the state of Florida and Kentucky. And in this podcast, we just guide you to make and teach you the best strategies to learn about finances, to learn about not only real estate, but anything that's important. And today we are joined by one of my favorite CPAs. She's a strategist on taxes. So welcome, Anna. How are you?
Hi, Dolly. Good to see you, and good to see that we're matching today.
Matching colors, yeah.
This was not planned at all.
I know it. So let's go right to the chase. There's a lot of confusions between whenever you file a company. Why should someone file a company like an LLC or a partnership or an S Corp? What is the difference? Because I know there's some liabilities associated with any type of business. So it's important to always make sure you have a good person who can actually do this job for you. But on the taxes, I really would like to focus on an S Corp. Can you talk to me about what an S Corp is and how it actually works?
Yes. So the S Corp is more like a tax strategy. It's a tax election, right? It's an election you make with the IRS to file your taxes a certain way. Who can file as an S Corp and take advantage of the tax savings that it provides and the benefits that it provides? Anybody who's a sole proprietor, meaning anybody with a business who does not have the business set up as an LLC, somebody who actually has an LLC, these people can become S Corps. A C corporation can also become an S Corp. And so there's several advantages that we're going to cover now.
Perfect. So what is the structure? How does the S Corp structure allows business owners to save on self-employment taxes compared to other business structures like an LLC or sole proprietorship?
So the number one tax savings tip that we can give when we turn a business into an S Corp is to save on self-employment taxes, or what we call payroll taxes, or FICA, right? So what that means is if you're a sole prop or if you are an LLC, just with one owner, okay? Because if you have two owners, you automatically become a partnership. So if you're an LLC with one owner or a sole prop, we usually recommend becoming or filing as an S Corp for tax purposes, precisely to save on that 15.3% of tax payroll taxes.
So sometimes I've heard some CPAs advising to go to an LLC or you're not ready for an S Corp. When would someone know to go to an S Corp rather than continue to filing as a sole proprietor or as an LLC? Because it's one of the most common business structures that people, whenever they start their own business, they go right to an LLC or right to just a sole proprietorship.
Correct. There actually is we use a threshold of when it's a good time to save, to become an S Corp and save on those payroll taxes, right? Because we don't want, so when you create the S Corp, when you elect to file as an S Corp, you have to pay somebody to prepare those taxes, unless you do it yourself, right? Which we don't recommend, of course. But you can go to your tax preparer and then you will have to pay them to prepare that extra additional tax return. And that's when it becomes an issue of, does it make sense for me, right? So we usually say when your net income, so let's say your business is earning $100,000 and you have gross income, right? And you have $20,000 in expenses, then your net income is $80,000, right? So that would be a good client for an S Corp election. But when do you really start seeing the benefit? Is at the $30,000 to $40,000 mark. You already see savings high enough to be larger than having to pay for your tax preparation services. Another point to consider is when you have an S Corp, you have to have payroll, which is how you really save on your taxes, right? So When you have your W-2, you're an employee now of the S Corp. When you have to pay for these payroll services, that's another added cost. So that's what we evaluate to make sure that you're really saving by becoming an S Corp for tax purposes.
So basically, it's more what I understand, that it's more about the cost, to be more cost efficient rather than continue to be an LLC or to go to an S corp based on the cost associated being an S corp. So, but because one of the expenses definitely you would have to pay yourself. Now, what happens whenever you start paying yourself? Let's say that you are the owner and you start paying yourself with a W-2. You decide how instead doing it through member draws on an LLC. However, what happens with that net income whenever you file your taxes at the end of the year and you pay yourself 20,000 via W-2? Whatever that extra income it's left on the company side, who pays taxes on that? Does it goes directly to the owner, or is that something that a company expense?
Okay. Very, very good question and very good point. So when you have the LLC, right? You're going back to our example of 100,000 gross revenue, 20,000 expenses. You have $80,000 of net income. If you do what you said, you called member draw. So let's say you take money out of the $80,000 out of the bank, you still have to pay taxes on the $80,000. So what kind of taxes do you pay? You pay your federal tax and you pay the payroll tax, the 15.3% on the entire 80,000. If we go to the S corporation example, we're saying you made 100,000 gross income, you have 20,000 of operating expenses, and you assign yourself a salary. Let's assume your salary is 20,000, just to give, or let's do 30,000, right? So now you have 100 minus 20 minus 30. You have $50,000 left, and you're saying, what do we do with that, right? Who pays that? Who reports that? And like you said, you will report it. So the owner of the S corporation, the shareholder, is the one who reports down on the taxes. What's different now is that out of the 80,000 that the LLC paid both federal and payroll taxes on, the S corp is only going to pay federal and payroll on the $30,000 salary, and the other 50,000 is going to go as a distribution, meaning only federal taxes are paid. So you save 15% on the $50,000.
Now it makes sense. I was just trying to figure out what is the actual difference, where is the actual savings coming to play. And whenever you watch it at home, whenever you are deciding going to an LLC or an S corp, or because you can be an LLC and file as an S corp on tax purposes, is that correct?
That is correct.
That's, I believe, is an election that you would have to tell your accountant, and they could do the election for you. And but go ahead, sit down with your accountant. I hope that this video have helped you understand the actual differences and when it would make sense for you guys to do it. So remember, there's a specific tax threshold or income levels to make this worth your while. Once again, because of the cost related to filing not only the taxes at the end of the year, but but potentially on your payroll expenses if you would have to hire another company or you're going to have to do it yourself. So go with a specialist. There are different type of CPAs. There are CPAs that just do taxes. There are CPAs that specializes on just tax audits. But then there's also CPAs that do strategies. It's very important because no one really talks about strategies. It just, and Anna and I were talking a couple of days back, and there's just a lot of CPAs that they don't focus on the strategies. They don't know because they don't really study that portion of the taxes. So go with someone who really who will allow you to understand in simple words, what makes sense and what doesn't make sense. So I don't know, Anna, if you wanted to add anything to that. I am not a CPA. I have no idea about taxes. So that's why you are the tax specialist, tax strategist. I think specialist, it's not really up to your level, but you're a tax specialist. I don't know if you wanted to add anything on that, because people are really not aware. I kind of thought initially that everyone at every CPA kind of did the same thing, which they don't.
No, yeah, correct. And there's many tax preparers, many accountants, even CPAs who will tell you just create an S corp. It's a great strategy, but at the end of the day, the entity is the net income is not sufficient for it to make sense. You're paying someone, you have to now assign payroll. There's a lot that goes into this. So yes, definitely get someone who really knows about tax planning and tax strategies that can help you. And one thing that I want to add is what's important is to make sure that you're reaching out to your accountant, your CPA, your tax preparer before the year end, because most of the strategies you have to do before the year end. The S corp can be backdated. You could file your taxes next year and backdate it to the 1st of 2024. But there's many other strategies that you have to implement and you have to do before the year end.
Gotcha. Anna, thank you so much. I so much appreciate your time that you spent with us trying to educate us in taxes. And we're here. We're very blessed to have you on board. You guys at home, please make sure to share this content, subscribe to our channel so you don't miss any of our episodes. And I will see you guys next week. Bye-bye. Thank you.